I'm here today with Kev O'Leary, Mr. Wonderful. It's just wonderful to have you here with us for this conversation.
Great to be here, Jeremy.
It's been quite a journey, and actually maybe a good place to start. I'd love to maybe hear you talk a little bit about your own kind of journey into this space.
Yeah.
And I've been able to have somewhat of a front row seat to some of that, but it's been amazing to see all the things that you've gotten involved in as well. But just talk a little bit about when did that click and then what you've been up to.
I'm often reminded that I was a vocal critic of crypto in 2017.
There's a clip of you and I actually on television.
You're correct, and that gets shoved in my face and in other orifices all the time. But I change my job is a fiduciary, so when rules change, I change, and I have to, because the people that I work with and for realize that there's tremendous opportunity in this space, and I have come to the realization, just on a categoric basis, that within a decade this will be the 12th sector, the S&P, because it provides so much productivity, so much transparency, so much opportunity for all other sectors in terms of financial services, that it will find its place. We're in a difficult area now because we lack regulation, but my whole journey into it, particularly stable coins, is the frustration I have as an international investor in payment, in the absolute inefficiency and cost of moving money between geographies, which I do every day. And I've detailed many catastrophes where I'm transferring capital and it gets lost for 48 hours, or it gets lost over a weekend, or I can't find what happened to it for 3 or 4 hours, and I can't close transactions. And it turns out that banks were never good at this, and they're still not good at it.
The realization I had when I actually started working on Circle was like, money is essentially record-keeping systems. Like, it's ledgers, right? And whether it's a ledger at the central bank, or a ledger at a commercial bank, or the old-fashioned like ledgers that the Medicis or whatever were using. And the technology, when you peel back the onion and you look at underneath, what is the technology that makes money either move slow or move fast or be expensive or not expensive, is a lot of it is just like this incredibly antiquated models of keeping track of this information. And blockchains are a much more open, accessible, transparent, auditable, real-time, publicly available infrastructure. And so it is, once you have that and you start using it, and you think about that compared to what you deal with in the legacy world, it's like, oh my God, this is so much fun.
I would very much like to use it for reasons of all those, plus the efficiency of moving it. And something very important happened last week. Jamie Dimon on the Hill, a manager I have ultimate respect for, I'm an investor in his company, as every fiduciary is. It's a 5% weighting in any index fund. It is the best managed financial services company in the world, one can argue. When he actually, there's no better words than to say, took a shit on crypto in front of every legislator, which was a huge disservice, but also a wake-up call to make it blatantly obvious that he was talking his own book. He can't do what you can do, and he knows that. And at some point he's going to realize that, because his clients are going to say, I want to use that service. Maybe in conjunction with what I do with you, but they're just better at what they do in a payment system. To me, it was a turning point, because we're at a low on legislation. I know you're working hard along with others, along with me. There's private investors that go to the Hill, I'm one of them. When are we going to get some policy on this? Because it was a story 36 months ago that everybody understood we had to wait, but now it's becoming apparent that we are falling behind as an economy on this. And you're one of the guys leading it. So I'm going to reverse roles here for a second. What are you doing to fix this?
Kevin, it's a good question. Look, a couple thoughts. One, just on Dimon and his comments. I think it's really easy for quote unquote critics to take a shit on things when a market prices change, there's volatility, all this sort of stuff. And you're seeing a lot of that out there right now, where people are like, oh, these markets are off, and so I'm gonna...
And you're talking about specifically the catastrophes in stablecoin of recent times.
Yeah, catastrophes in stablecoin, catastrophes in other parts of crypto markets and other things as well. And so I think, and these lending companies that went belly up and all this. So there's this sort of stuff, and I think that makes it, people who want to be critical, they can come out in full force.
Well, certainly doing that.
Yeah. But I think it's like I think it's shallow, and I think it's short-termism, and it's not really thinking things through.
Do you think he feels the threat of this change to his fundamental service as a bank?
I can't certainly get inside his head and thinking about this. What I would say is, and I'll come back to your question, is a payment stablecoin that is essentially like a token representation of cash, that is essentially a mixture of cash at the Fed and short-term U.S. government treasury bonds. That is the sort of, in some ways, like would be the safest digital dollar in the world. Whereas a deposit at a commercial bank, whether it's JP Morgan or any other, that's a loan to the bank, and the bank is then lending the money, and you got a claim on it, but it's different. And so I think that the idea of full reserve banking and full reserve dollar payment systems is a really powerful concept whose time has come. And I do think that is threatening. That is threatening to institutions that have built their payment systems around fractional reserve lending and this. So a little bit of a digression. I think coming to the question of what am I doing about it? Look, we have been advocating in many forums, in many venues, for federal payment-related stablecoin legislation. And I think the good news is that this is something everybody agrees about. So
well, certainly on a bipartisan basis. Who doesn't want to support the US dollar as a default payment system?
So support the US dollar, everyone agrees. There's a bunch of risk that exists, and we need rules around it. We need to have clear rules so that terrible things don't happen to both end users, customers, businesses, etc. Everyone agrees what those risks are and basically how to address them, meaning the kinds of high-quality liquid assets that should back these, the kinds of reporting requirements, kind of restrictions on what you can do. Everyone agrees about that. And so the interesting thing is, whether it's the Fed or Treasury or Republicans or Democrats, everyone agrees on what needs to be done. And I think we're really close. We're really close. As we speak, people are grinding it out in Washington, trying to get to land on a bill that would establish a federal model for stablecoins, which we think would be huge for the US, huge for this whole market. So we're really close. We live in a federalist system. You've got states, you've got the federal government, you've got...
I know the bill you speak of. Everybody knows it. It's public knowledge that this thing's being worked on, and those that are advocates and go to the Hill. You have issues with the states who don't want to play it that way. Everybody knows that too. So you're going to have to calm them down or whatever.
Yeah.
You also, and I'd like you to speak to this, because I want the answer, so does everybody else. You've got a turf war going on here, and who's going to regulate this? Is it the Fed? Is it the SEC or another agency? Who should regulate? Let's just stay on stablecoin, the one thing that would make sense to go first, because we're not going to save every token here. We're not going to have a blanket bill for everything. Stablecoins could be very useful right now, and who should regulate it?
I think, like, as you've said, you want to be able to use this for payments.
Yes.
And you want to, for all the things that you've seen as an international investor, as someone who's building businesses, works in the movement of money for all kinds of professional means, you want to be able to use this as something that is as good as cash and is accepted as like a digital cash instrument all around the world. And that, something that is in fact a version of the dollar, just like a bank deposit's like a version of the dollar, that is the domain of the Federal Reserve. And
an eloquent solution, because if I felt the Fed, who regulates the dollar, the currency itself, was also regulating this, it would tie the brands together for all stablecoins that we're going to use the dollar. We're speaking as if you're the only stablecoin. You're not.
There's many.
There's many.
There are going to be more. And
that's
part of this legislation is to create a way to have a clear path for whether it's banks, non-banks, startup companies.
Let there be competition. I'm fine with that.
Absolutely.
But let me ask you another question that is on the minds. Let me represent the institutional market for a moment that must, by definition, be compliant. And that means they have their own compliance departments, as I have. They have auditors, and they have the regulators that they report to. What's missing here, and your work is not done, is giving us the infrastructure that lets us be compliant in a fashion that's open and transparent and easy for people to work with. Now, I've been using the Circle account for over a year now. It's getting better all the time, the Treasury tab, all that stuff, but you're not finished yet.
No.
There's, in order to take cash and say, okay, let's move 50 million into this thing and start paying to manage our
for
funds.
fundamental treasury operations.
Right, fundamental treasury operations, because it's a sweep account.
Yeah.
It needs more dashboarding, more structure.
Yeah.
Are you working on that?
Yeah, absolutely. One of the exciting things that we have going on here at Converge is we're going to be talking a lot about where we're going with all of our platforms, and we have this concept of kind of business banking. What is the future of treasury accounts? What are all the things that you're going to be able to do? It's a huge investment area for us. So
it should be.
We have a vision for what the next generation commercial financial account looks like that is 100% digital asset based, and that allows people to seamlessly interact with counterparties, whether it's in payment experiences or in dealing with the ways in which people are interacting with DeFi and other things. And so we definitely are advancing it. And I think, coming back to the regulation question, it's really critical that everyone from the CFO to the compliance department to the third-party accountant or accounting firm, et cetera, that everyone knows what are these financial instruments, where do I put them in my books and records, how do they get reported, how do I treat them, if I accept a payment with this from a customer, what is that? And it's the unglamorous part of all of this